Hello, listeners. Welcome to the Morning Market Update, powered by AI. I'm Joe.
And I'm Sarah. Today is March 5th, 2026. Let's dive in. Starting with the U.S. markets, it's been a roller coaster week, and we're seeing some recovery after significant losses. The S&P 500 futures are pointing up, showing resilience after absorbing a 1% dip yesterday. The Dow Jones, however, still bears the brunt of market volatility, having fallen nearly 800 points due to a spike in oil prices. The Nasdaq is cutting some of its losses, thanks to a rebound in tech stocks, notably Broadcom, which soared on promising AI revenue forecasts. The Russell 2000, which tracks smaller cap stocks, mirrors the broader market recovery but remains cautious. This sector rotation, with tech stocks picking up while energy remains volatile, indicates investors are weighing the impact of fluctuating oil prices amid the war in the Middle East. The weaker dollar is also playing into today's optimism, as it helps ease some pressure on equities. As we watch these indexes, it's clear that the market is in a delicate balance, with the ongoing geopolitical tensions and oil price movements setting the tone for the day's trading.
Turning to Canada, the TSX showed resilience, buoyed by strong performances in the energy and financial sectors. Despite global uncertainties, Canadian energy stocks have been a standout, fueled by elevated oil prices. This sector's strength is particularly critical as oil hovers around $80 per barrel, giving a significant boost to Canadian oil producers. In corporate news, one of Canada's top banks has made a move into crypto, launching a new multi-asset fund, which reflects a growing integration of digital assets into traditional finance. The Canadian dollar has been relatively stable against the US dollar, maintaining its strength due to the oil price surge and the relative weakness of the greenback. This stability provides a buffer for Canadian exporters, which is vital for sectors like mining and agriculture. Overall, the TSX performance is a testament to Canada's resource-driven economy, which is currently benefiting from global energy market trends.
Now let's fly across to Europe and Asia. European markets are in recovery mode today as well, with the FTSE 100, DAX, and CAC 40 all rebounding after a turbulent week. The recovery is partly driven by investor sentiment that things may stabilize despite ongoing geopolitical tensions. In Asia, however, markets were a mixed bag. The Nikkei slipped slightly due to concerns over elevated oil prices and semiconductor shortages, which continue to plague industries globally. Meanwhile, the Hang Seng edged higher as investors sought bargains after recent sell-offs. Over in India, the Nifty 50 also saw gains, supported by positive news on oil imports following a U.S. waiver allowing increased purchases of Russian oil. This move is a strategic play to mitigate the supply crunch due to disruptions in the Middle East. For North American investors, these global movements highlight the interconnectedness of markets and the importance of keeping an eye on international developments, which can have ripple effects back home.
Switching gears to commodities and crypto, oil prices remain the focal point. Brent crude is trading at around $84.66 per barrel, while WTI is close behind at $79.94. These elevated prices are reacting to the U.S.-Iran conflict and disruptions in the Strait of Hormuz. The potential of U.S. intervention in the oil futures market adds another layer of complexity. Gold and silver have found support amid the geopolitical tensions, with gold trading higher as investors seek safe havens. In the crypto world, Bitcoin remains strong above $72,000. Despite some profit-taking. Ethereum is holding its ground as well, although the crypto market remains jittery. XRP, though pushing past $1.40, faces risks of pulling back below $1.30 if Bitcoin's price action turns south. The crypto space continues to be volatile, with macroeconomic factors heavily influencing sentiment.
On the corporate front in North America, we have several stories catching our attention. Broadcom's strong earnings and optimistic AI forecasts have sent its stock soaring, providing a much-needed boost to tech stocks. This optimism in AI-driven growth is a recurring theme as companies aim to capitalize on AI advancements. Meanwhile, Eli Lilly has hit a sell signal after a recent rally, highlighting the volatility in the pharmaceutical sector. In other news, Wells Fargo has seen the termination of an enforcement action by the Federal Reserve, a positive signal for the bank that could potentially bolster investor confidence. Also noteworthy is the move by a top Canadian bank into the crypto space, reflecting a growing trend among traditional financial institutions to embrace digital currencies. These developments underscore the dynamic nature of corporate strategies in response to evolving market conditions.
Internationally, there are several stories with implications for North American investors. In Europe, the approval of Pfizer's obesity drug in China opens up a substantial market, potentially impacting Pfizer's global revenue streams. Meanwhile, in Asia, Chinese markets have shown resilience amid the Iran conflict, outperforming other Asian indices, which is an interesting development considering the broader market sell-off. South Korea's market volatility, despite being last year's best performer, highlights the risks inherent in markets traditionally seen as stable. Additionally, Indian refiners are capitalizing on U.S. waivers to import Russian oil, which could reshape the regional energy landscape and impact global supply chains. These stories highlight the interconnected nature of global markets and the importance of international developments for North American investors.
In terms of economics and geopolitics, the Fed's potential interest rate moves are a hot topic. With oil prices soaring, inflation concerns are back on the table, and there's speculation that the Fed might cut rates in response, despite the inflationary backdrop. This potential cut aligns with President Trump's recent Fed pick, who sees inflation risks differently. Globally, the International Monetary Fund warns that a sustained rise in oil prices could significantly impact global inflation and growth rates, adding pressure on central banks to act. Meanwhile, geopolitical tensions in the Middle East continue to affect global trade routes, with implications for energy prices and inflation. These developments are crucial for investors to monitor, as they could dictate the direction of monetary policy and market stability.
So, what does all this mean for investors heading into today's session? Firstly, monitor oil prices closely, as they are pivotal in shaping market sentiment right now. The ongoing geopolitical tensions could lead to further volatility in energy markets. Secondly, keep an eye on tech stocks, especially those with strong AI prospects, as they continue to show resilience and growth potential despite broader market swings. Lastly, be cautious of potential rate moves by the Fed, as these could have widespread implications for equities and bonds. Upcoming data releases on jobs and inflation will also be critical in shaping market expectations. As always, staying informed and adaptable to market conditions is key.
That's your morning briefing. Add your thoughts in the comments or send us a message with your insights.
And Joe, signing off. See you tomorrow.